This is to provide you some information for the completion of Assignment 9. In Assignment 9, we begin to look at some additional footnote disclosures and other information that the company must disclose. Let's talk about the Excel spreadsheet first. The Excel spreadsheet is made up of two parts. One is retirement data, and on this worksheet, I have given you the locations within the report where you'll find the information that's necessary to complete this Excel worksheet. Now, the primary thing that I want you to look at when you see this is to look at the percentage of revenue that retirement plans represent for the company. Um, this is important when we talk about uh, commitments that the company has made to their employees, commitments that they've made that will have a future impact on earnings because they have to fund or continue to fund these retirement plans. So this is more just a disclosure and informative worksheet to help you look at these things. The other portion of this is the worksheet that deals with quarterly data. Now, this information, really what I want you to look at here is the trends that occur within revenue. In other words, when does or in what quarter does the company make the most of their sales? What do those trends tell you about what was occurring at year end, which would be the fourth quarter? Uh, what happens in the first year or first quarter, which in the case of this company is January, February, March, and look at management discussion and analysis to see what they say might be causing these trends to occur. Okay. Now, the second portion, excuse me, the second portion of this is um, the Word document. Now, the first thing that you have to deal with there is income taxes. There is a footnote on income taxes. And if you'll remember when we've looked at this company this year, we find that income taxes are down significantly because of a change in the tax law that occurred in December of the year under examination. So, pardon me, when you look at this and you see the effective tax rate, realize that generally the effective tax rate would be in the low 30s. And in this case, it's down in single digits. Now, operating segments and geographic information. Basically, the segments information is again that way that management breaks down the operations of the company and makes decisions about them. So, when you're looking at this, you want to look at what are those segments and what did management include in those. The geographic information is really meant to tell you where the most of their operations occur. Now, in the case of this company, there's only two geographic locations, um, and so you don't gather a whole lot of information because one of them is international, which doesn't provide you much information about non-U.S. activities. However, what that should tell you is that because they can quote group together all of their international operations, that it's not a very significant portion of their operations at the present time. Now, the next part of that is to uh, determine net sales for those operating segments and look at those. And again, when you look at them, you'll see that their non-U.S. sales don't amount to a whole lot when you look at total sales of the company. Now, contingencies, various footnotes. I would suggest that you look at legal matters, uh, look at commitments and contingencies, and determine what kind of commitments and contingencies there may be that could potentially affect future earnings of the company. Uh, Quarterly data, again, look at the the information. Look at what management says about it. Okay, that'll be included in either the area where you find this in the report, or again maybe in management's discussion and analysis. Um, the disclosure of non-cash investing and financing activities in the cash flow statement is, if you'll remember back in 2301 when we looked at the statement of cash flows, we said that those things that affect the various balance sheet accounts that don't represent the inflow or outflow of cash must be separately disclosed because they affect the balance sheet amounts. However, they do not appear on the statement of cash flows. So you'll find those things probably in a footnote disclosure for this company since they did not do it on the statement of cash flows. And then I ask you a question about why capital lease additions are included in non-cash transactions. So think about this. Remember the journal entry that would be made if we capitalized the lease. That entry would be to debit fixed assets and credit notes payable or capital lease payable. And then think about how that is accounted for in the financial statements on a continuing basis. And so that's basically what we'll be doing in Assignment 9. Thank you. If you have any questions, please feel free to contact me. Have a good day.